All right, let's dive straight into this explainer and demystify exactly what on earth is happening in the July 2026 Waterloo Region real estate market. If you've been following the data lately, you know things are shifting, and they are shifting fast. We are finally moving past those old peaks and valleys, and today we're laying out the exact facts to give you the upper hand.
To help you navigate all these shifting numbers, here's our quick roadmap. We'll start with the reality of our balanced market, break things down city by city, look at the winners and losers by property type, uncover the hidden macro influences, and finally, wrap up with your strategic market playbook.
Okay, part one, a balanced market reality. We really need to separate the myth from the reality in Waterloo Region right now.
So, with all those recent headlines screaming about falling prices and inventory piling up, you're probably asking yourself, are buyers just completely running the show right now? It's a totally fair assumption to make when you hear about prices dropping, but, well, the data tells a slightly different story.
The surprising reality? No, they aren't. We are firmly in a balanced market. I know, shocker, right? What this actually means is you need a much more strategic approach whether you're buying or selling. Buyers absolutely have more choice, yes, but properly prepared and aggressively marketed homes are still selling very efficiently. We aren't in a free fall here, it's more like a normalization period. You can't just slap a sign on your lawn and expect a wild bidding war anymore, and buyers can't just throw out lowball offers on everything and expect a yes. This market really rewards preparation.
Let's look at the actual numbers. The key thing here is that 4.1 months of supply you see at the bottom. In the real estate world, that sits squarely in the zone that defines a balanced, stable market. And that's true even with the average price taking a 6.4% year-over-year dip down to roughly $729,000. Oh, and while year-over-year sales are sluggish, making it a record slow June, month-over-month sales actually bumped up by 4.3%. That tells us sidelined buyers are finally getting their confidence back and strategically jumping back in.
Moving on to part two, our city versus city breakdown. Honestly, it's a tale of three cities.
You see, treating the entire Waterloo region as one big, identical market is a huge mistake right now, and this brilliantly illustrates the regional divide. Look at Cambridge. It is surging. We're talking 15.2% year-over-year sales growth. With a super tight supply of just 3.6 months, it's acting almost like a seller's market. But then you flip over to Kitchener and Waterloo, and they're seeing steep sales declines, down 12.2% and 13.2% respectively. So you can see how the overall regional balance is actually hiding some major local extremes. If you try to use a Kitchener strategy in Cambridge, you are absolutely going to lose out.
Now, if you're looking to buy, Kitchener is where you actually have the most leverage right now. They took the biggest hit with a significant 10.6% drop in average price year over year, bringing it down to about $670,000. That signals some serious buyer caution, but for the savvy investor or home buyer, that is massive negotiation room. Waterloo, on the other hand, only saw a modest 3.2% dip. So honestly, targeting specific pockets in Kitchener might literally be your best play for stretching your dollar.
All right, part three, winners and losers by property. Let's find out exactly where the leverage lies based on what you're buying. Because geography is only half the battle, right? The specific type of property you own or want to buy dictates exactly who holds the power at the negotiating table. And this right here is probably the starkest contrast in our entire explainer. Semi-detached homes are insanely competitive and scarce, sitting at just 1.7 months of supply. They are the absolute tightest segment in the entire market. But condos? Condos are massively oversupplied at a wild 8.8 months of supply, giving condo buyers total leverage. To put that crazy discrepancy into perspective, condos are currently selling for, on average, just 95.5% of their asking price.
Here's the breakdown of median prices. The crucial point is that while single-family detached homes are still hot, often fetching over 100% of their list price, townhomes and condos are clearly the price laggards of the region. Condos have seen a 9% year-over-year price drop, landing at a median of $380,000, while townhomes dropped 9.2%. Basically, if you own a well-priced freehold property, you're sitting pretty with strong demand. But if you're shopping for a condo, you are squarely in the driver's seat.
Let's zoom out for part four, macro influences and policies. These are the hidden drivers making all of this micro-level stuff happen. Because local real estate definitely doesn't exist in a vacuum. The big anchor right now, 2.25%. The Bank of Canada just held its overnight rate right there for the sixth consecutive time as of mid-July 2026. This is acting as a massive stabilizing force that is slowly but surely pulling buyer confidence back from the brink. 5-year fixed rates are hovering right around 4.04%, which means affordability is finally starting to improve compared to those wild peaks we all had to navigate in 2023 and 2024.
And then there's this major shift. The new federal cap lowering permanent resident admissions to 380,000 annually through 2028. This is having a huge impact locally. Waterloo Region has historically been a major hub for newcomers and international students, whose permits, by the way, were also slashed almost in half. This policy is directly easing upward pressure on prices because it immediately cuts short-term rental demand. It's the exact reason we're seeing that whopping 8.8 months of supply in the condo market. Fewer students literally equals significantly less demand for entry-level rentals and condominiums.
Sellers, listen up, because this is crucial. New government policies, like the federal HST rebate for first-time buyers on new homes, are strategically designed to push demand toward new construction. That's naturally going to siphon demand away from existing condos and townhomes. Combine that with federal estimates saying immigration cuts will shrink the housing supply gap by 670,000 units by 2027, plus Ontario's ongoing push to speed up building approvals. When you stack all this together, you see a massive structural shift in how our local supply and demand actually balance out.
Which brings us to our final section, Part 5, your Strategic Market Playbook, featuring strategies from local expert Sidak Chhabra. Now that we've decoded all this heavy data, how do you actually use it? Because having the numbers is one thing, knowing how to execute is another. Sidak uses these exact market nuances to ensure you maintain the upper hand. Buying a condo? Use that huge 8.8 months of supply to aggressively negotiate below list price. Selling a highly sought-after semi? Utilize hold-off dates and competitive bidding to maximize your return. If you're a first-timer, it's all about strategically leveraging that new HST rebate. And investors? Forget guessing. You need strict cash flow analysis, especially in those oversupplied segments.
By taking this real-time neighborhood-by-neighborhood data and mixing it with completely transparent communication, Sidak tailors a game plan just for you, whether you're braving the heat of Cambridge or capitalizing on the cooling trends in Kitchener. Look, we are in a market right now where homes priced correctly below market value are flying off the shelf in under 2 weeks. But traditionally priced ones, they're sitting there for 45 to 60 agonizing days. Having this level of data-backed pricing and week-to-week comparable analysis is absolutely critical. You simply cannot afford to list blindly or overpay when the metrics dictate otherwise.
So with the market finally balancing out, that whole era of blind bidding and pure guesswork, it is officially over. The data is laid out right in front of you. The only question left is, will you adapt this new reality to find your opportunity, or will you let the market pass you by? Think about exactly where you fit into this puzzle, and whatever you do, don't hesitate to leverage these insights to your absolute advantage.